On 2nd May 2015, 1 US dollar was equal to 62.11 Indian rupees, and by 8th May 2025, it rose to 84.94 Indian rupees, which means in the past decade, the dollar appreciation against the rupee was close to 33%. This difference in currency value directly impacts your investment portfolio, and that's why in this video, we will discuss how currency appreciation affects your investment portfolio. We will deep dive into USD appreciation and how Indians can benefit from it. To understand it, we need to see the relationship between the USD and the rupee over the past few years. So, in the past 1 year, the rupee has fallen by 1.55% against USD, and in the past 5 years, it has fallen by a massive 10.91% against USD. Now, this shows the continuous appreciation of the USD against the rupee, which means investing in the US markets will make your capital appreciate automatically. And to understand that, let's see how this appreciation actually affects the stock market return. Look, in the past 10 years, the S&P 500 gave an absolute return of 188%, whereas the Nifty 50 soared by 182%. And as we calculated above, the dollar appreciation in the past 10 years was around 33%. Now, if 10 years ago you had invested 1 lakh rupees in Nifty 50 and S&P 500, you would get around rupees 2,82,000 and 2,88,000 respectively. But wait, we didn't factor in the 33% appreciation, which means your effective return should be around 283%. So that's how USD appreciation affects the stock market returns. However, the US dollar is not the only currency going up against the INR. In fact, the euro and Kuwaiti dinar, some of the strongest global currencies, have a higher value against INR compared to the USD's value against INR. As of 7th May 2025, 1 euro is equal to 96 Indian rupees and 1 Kuwaiti dinar is equal to 276 Indian rupees. So does this mean that these markets can give higher returns than the US? Well, no. Because in the past 10 years, the USD appreciated against the Indian rupees by around 33%, whereas the euro and the Kuwaiti dinar appreciated by only 16% and 31% respectively. But that's not it. USD's role in the global market is well known. Also, the economic and political stability in the US further strengthens the dollar's domination across the globe. In fact, many countries and their financial institutions hold the US dollar as part of their foreign exchange reserve, which demonstrates the world's dependency on the US dollar. Now let's look at the advantages of investing in the US market. When you invest in the US market, you have the opportunity to own some of the world's biggest companies. Of the $12 trillion companies in the world, the US is home to 9 of them. Cumulatively, these have a valuation of around $17 trillion. These companies include market leaders like Apple, Amazon, and Nvidia. Now let's compare the market performance of the S&P 500 to MSCI World, which tracks 1,500 large and mid-cap companies of the developed world. In the past decade, the S&P 500 has given an absolute return of 188%, whereas the MSCI World could only gain 159%. I hope you now understand what currency appreciation means and how you can access it with minimal risk. Moreover, investing in US markets can enhance your portfolio as the dollar is a globally accepted currency and appreciates well against the rupee. So that's it from this video. Now subscribe to our channel if you found this video helpful, and don't forget to drop your views in the comments below.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.